Last week, Savills published a number that should change how every property investor in this country thinks about the market. 700 former rental homes are being listed for sale every single day in Britain. 254,000 properties in the last 12 months, 28% above the year before. 86% are leaving the rental sector permanently. If you're scrolling through property news right now, this is being framed as a disaster, the death of buy-to-let. I want to take you through why I think it's almost the opposite. By the end of this video, you'll see why this might be the best opening for serious investors in over a decade. Here's what the data says. 254,000 properties listed in the last 12 months, 700 a day every day, 28% above the year ending March 24, trend accelerating. 86% of those properties are sold to people who will not let them out again. Owner-occupiers, first-time buyers, holiday-let operators gone from the rental sector permanently. Only 14% are bought by another landlord and put back into the rental pool. That sounds bad, but ask yourself one question: who exactly is leaving? Lucian Cook, head of residential research at Savills, was direct about this. The landlords leaving are not the professional ones. They're smaller portfolios, mortgaged, often accidental landlords from inherited properties or homes they just couldn't sell. Higher rate taxpayers quietly losing money since Section 24 phased out, mortgage interest relief. The ones who never set up properly, poorly maintained properties, no proper letting agent, ignoring regulation because nothing forced them to engage. The Renters' Right Act has now forced them to engage. Section 21 abolished, all tenancies periodic, rent rises capped to once a year, bidding wars banned, information sheet by the end of May or a £7,000 fine. For a professional landlord, administrative charges, comply, move on. For an accidental landlord winging it for 10 years, it's the moment you decide it's not worth it. Here's the bit that matters. What's left in the rental market is not a dying sector, it's a smaller, more professional, more compliant rental sector with the same number of tenants competing for it. When the amateur leave, average rental quality goes up, compliance standards rise, tenant experience improves and rental supply tightens. The ONS released rental data this week. Yorkshire Humber rents up 4.4% year on year. York rents up to 5%. York terraced rents specifically up to 5.2%, all outpacing the UK average. That's tenants paying more for fewer properties to a smaller, more professional pool of landlords. If you're entering buy-to-let now with proper structure, limited company, professional management, compliance from day one, the right area, this is the strongest demand backdrop in 15 years. And the mortgage market has noticed. High street banks launching new SPV products. Lombard Odier forecasts the Bank of England base rate could hit 2.75% by year end, 100 basis points below today. The lending market has chosen which investor wins. They're competing for the professional landlord, not the amateur. The window is open, it will not stay open forever. One last thing, while retail landlords have been leaving in droves, institutional capital has been pouring into towns retail investors don't know about. Goole, 240 million from Siemens, 400 million from Metzer Tissue. Humber Freeport, a designation across 500 acres, a 5.5 million square foot industrial park developed by St John's College, Cambridge and Henry Boot. A town of 20,000 people, over £1 billion of institutional capital committed in 3 years. 3-bed terraces in Goole still cost around £100,000. The houses haven't repriced yet. That gap between what institutions know and what the market has priced is the asymmetry experienced investors spend careers trying to find. This is what professionalisation of UK buy-to-let looks like. Not the death of the sector, the smartening of it. So if you're sitting in London or the South East with capital you've been planning to invest and you've been watching the headlines feeling unsure, I'd say this: the investor who will look back at May 2026 as the start of a turning point are paying attention right now. The ones who wish they had, they're reading headlines, getting overwhelmed and waiting for things to settle down. If you want to understand what hands-off Yorkshire property could look like for your specific situation, drop Yorkshire in the comments below. I'll send you a link to book a free discovery call. Worst case, you walk away with absolute clarity. Best case, we go and find you your first deal together. This is Kaylee, the Yorkshire Property Sourcer, helping you invest in property the right way. I'll see you in the next video.